a little bit more about who Attivo is. That's me in the picture there, Len. I'm the founder and president here at Attivo, and so we handle everything Macola. We've been doing it for a couple of decades now, and one of the key things that we often provide for our customers and certainly our prospects is business process assessments to help find out where the process improvement opportunities lie, as well as cloud hosting for Macola. It's taken us a few years to work out the details of how to do that effectively, both cost effectively and efficiently, and achieve a 99.99% availability. For those that are on-premise and should be on-premise, whether they've just purchased new hardware or whatnot, we provide disaster recovery solutions. Very inexpensive insurance to have a complete failover system in the event of a major natural disaster or non-natural disaster of some kind. Some of you may be using our credit card integration. It's tightly integrated in with the Macola system. And we provide several support plans. In some cases, it's a very comprehensive managed services kind of contract where we're looking after every single aspect of your system, from SQL to data to technical questions to whatever, all the way to supplemental support contracts for those who have support agreements with Exact already in place. And we're just providing the fill-in kind of work, the report writing, event manager, configuration, whatever might come up. And so we're nationwide. We're in all time zones. In fact, joining us today is John Brennan. John is one of our senior consultants, and he's located at an office in Ohio. So we have multiple resources in the Eastern time zone as well as Pacific. So today, we're going to cover outside processing for both types of manufacturing in Macola, both production order processing as well as shop floor control. John will be covering outside processing in production order processing, take us through the setup of that, as well as how the processing and POs work and the resulting or desired accounting that results from outside processing being managed. And then it'll switch it to me, and I'll handle the shop floor, the setup, the processing, the purchasing integration, and how all of that accounting works when shop floor and outside processing is in use. And then, as Greg said, we'll have questions. So why don't we get started with production order processing. John, it's all you.
Thank you, Len, and I want to welcome everyone to today's presentation. We're going to talk just a little bit about the POP concepts as far as outside processing is concerned. And while it's not the shop floor concept of how we do manufacturing, POP manufacturing is very effective for a lot of organizations. Those same organizations are still going to need to use outside processing. So today we're going to take a look at just how we're going to incorporate the concept of outside processing into POP manufacturing. We're going to allow for additional outside processing production costs, and we're going to be able to add those to the value of a parent item. We're also going to show how we're going to be able to create purchase orders using outside processing item as a specific item itself. And a lot of times what winds up happening is when it comes time to purchase outside processing, especially when you're using production order processing, it sort of slips by the wayside, and maybe we don't always get it exactly right as far as the coding is concerned. And we're going to show you how we're going to get that done. And finally, we're going to talk about the accounting distributions that are created at the time of order completion, during the processing of the order as well as during the completion of the production order processing order. So let's get started. Let's move along just a little bit. The next slide I want to take a look at is going to wind up being our POP value added costs. And when we talk about value-added costs, there's some things that we want to take a look at. First of all, we want to set up the value-added cost type, where we create the value-added cost type in POP, in production order processing. So that's going to show up in the menu selection. The other portion is to set up the product structure cost type. And here's where we add the value-added cost types, such as chroming or powder coating or whatever we've decided that cost type to be. Here's where we add it to the product structure. We can have multiple value-added cost types to a product structure, which will affect the cost of the parent item. And again, we're going to do that in the product structure costs in the POP menu. So let's go down the road just a little bit, and let's take a look at some of the screenshots that we've got, if you don't mind. First of all, we're going to go to the value-added cost type, and again, we're finding this in the POP maintenance menu. And what we're looking at here is the ability to add a value-added cost type. Now, the value-added cost type does not necessarily need to be outside processing. We could use labor, multiple types of labor, multiple types of outside processing, multiple types of burden, etc., as well as outside processing. We need to give that a name. In this particular instance, the one that we're going to be working with today, we're establishing the value-added cost type called CHR, which is chrome finishing. What is the cost rate? Well, the cost rate in this instance is 1. And we're going to say 1 because it's an each. All we're really talking about is setting out an each to have it finished. In chrome, maybe it would be powder coating. It could be priming. It could be painting. If, in fact, we were using this for labor, we might want to put in the labor rate here, which would be maybe $19 or $20 an hour. So what we're talking about here is the rate that we're going to be using. Next we have is our absorption account, and our absorption account here is 770. And what we're saying here is every time I run this product, every time I run the product that we're manufacturing, I want to charge to that account the amount of cost based upon the amount of production that we have. So it's almost like I'm earning this money, and I want to compare that to the expense that we're going to generate when we purchase the outside processing. So in fact, the absorption account here for outside processing will allow you to analyze your variances between not only what you planned as far as your outside processing is concerned, but what you're using as far as the expense is concerned. Okay, next slide. All right, now let's take a let's take a look at the product structure cost. When we take a look at the product structure cost, we're looking at using the value-added cost type to add the information to the product itself, to the PF frame assembly. First thing we want to look at is the fact that we've selected the parent item that's a manufactured item in POP. The value-added cost type we're looking at here is CHR. CHR is the chrome finishing that we just set up prior. The cost rate we have here is 1, so there'll be 1 unit. The cost factor is 5.4, so for each piece that we're manufacturing, the cost factor, or the cost factor itself is going to be $5.40. The product structure cost is going to be $5.40. As I was mentioning earlier, if we were using a different rate for $19, for instance, a cost factor might be 0.5 for a half an hour's worth of work, which gives us a product structure cost of help me, $9.50. The unit of measure here is an each, and the standard cost code is outside processing. And the standard cost code will be available to you if you're using standard costing. Again, we're identifying the absorption account for this particular piece going into the P-frame assembly. You'll also notice in the right-hand column, or on the right-hand side, we have include value-added cost in parent. It's not necessary to do that, but what we want to do is we want to make sure that when we process this transaction or run a costed bill of material, we're adding the information we're adding the cost into the parent item as a finished good. We're also able to check the box edit during production, but we're not going to do that right now. So in this instance, the value-added cost factor of $5.40 will be added to the parent cost. Okay? The next thing we want to do and take a look at is going to be, where does this show up? Where do we see this? When you're in a bill of material, and this is going to be the graphical representation of a bill, the icon all the way over to the right, well, it looks like a little red X with 2 green dots on top. When you click on that, if in fact you were looking at a shop order, you would be able to see the routing down below. In the instance where we're looking at production order processing, we're really looking at all of the various product structure costs, and some of them are, one of them is chrome, another one is labor, another one of them is burden and overhead, etc. One thing I want to point out here before I get a little bit deeper into this, when we talk about adding outside processing, there may be some additional costs associated with the outside processing. It might be freight in, it could be handling, it could be inspection, it could be any number of things. And this is an additional burden cost that we might want to include. Just as we created a product structure cost for the outside processing, we could also put in overhead and burden if we wanted to account for those additional costs in dealing with the outside processing, whether it's the shipping, the freight, inspection, etc. So this is the graphical depiction of what the item would look like. The next slide we're going to see is the actual report itself.
Actually, John, before we leave this slide, I have a question.
Okay.
I noticed that the cost rates for like chrome and overhead, they're all set to 1, but the labor cost rate is set to 9. Is there a reason why that's the case?
Well, actually it is. When we talk about chrome finishing, for instance, the cost rate of 1 is in the item itself is an each. So for every time I'm producing this item, it will be 1. The cost factor is going to be $5.40 for every time I create that. So the product structure cost, the cost I'm actually adding to the item itself, is going to be $5.40. As far as labor is concerned, the rate I'm going to charge, and you can charge any rate you want. But as I mentioned, $9, $18, whatever your rate for production is, whatever your labor rate is, you'd put that cost rate in. The cost factor then says, how much of that cost rate am I going to be using in the manufacturing of one of these items? In this particular instance, the cost factor is 0.5. So what we're looking at here is I'm using 1/2 of an hour for an hourly rate of $9, which gives me a product structure cost of $4.50. Did that help out a little bit?
Oh, I see. So basically, the cost factor for something like chrome finishing is always going to vary because that's kind of a one-off. However, we might use labor on a lot of different items, so it's best to use the cost rate for the hourly rate, just in case the shop rate goes up to $10 an hour, then I only have to adjust a rate in one place rather than in,
correct.
say, 40 places. I get it. Okay, so you kind of use them as whether it's a one-to-one or a one-to-many. I get it. Okay.
Correct. And the other thing is you're not limited to a single labor rate. If you have several shop rates that you want to be using for different types of the process, you can have any number of different labor rates, and you would be assigning those to each one of your parent items. But you're right. If I have LBR in a number of different assemblies, all I need to do to change that rate, if in fact the cost of labor goes up, is simply come up here and change the cost rate. And everything else, all the future production order processing orders, will be calculated at the correct product structure cost. Very good.
Okay.
All right. This is our costed bill of material report. Now you recall that we clicked the checkbox that we wanted to include in the parent cost. If you take a look here at the top of the page, you'll see where the value-added cost of CHR, chrome finishing, is added to the parent cost, and that parent cost shows us $85. So we can find this information in both places, whether it's in the actual BOM itself in the routing section, or whether it's in the costed bill of material report. Okay, outside processing item creation, and here's where we might struggle a little bit sometimes. What we want to do here is we actually want to include the cost of chrome finishing in the product we really need to have an actual inventory item for that process because we're going to need to purchase that. Sometimes we miss a couple of the steps in terms of creating that item. So let's just walk through how we're going to be doing this. First of all, we want to create a non-stock, non-controlled inventory item. With that non-stock, non-controlled inventory item, we need to change a couple of things. We need to create a unique material cost type for that item, and we also need to create a material cost type location record, which directs the PO to the proper expense account. Whether you use material cost type location records anyplace else, we're going to want to do it for this because we really need to change the inventory location to an expense account. Okay? So let's go and take a look at how we do that. The first thing we do is we go into a material cost type location maintenance screen. So we now want to create a material cost type of OP, which is outside processing. And the location is going to be Boston, Massachusetts. We want to, when we go into the material cost type, we have to set that up originally, and we're going to be doing that from the inventory application, as well as the material cost type location maintenance, again in the inventory application. We want to make sure that we have the outside processing expense. We're defining that for the inventory asset. Rather than adding anything into inventory, because this is a non-stock, non-controlled item, we want the debit, the charge, to go to outside processing expense. Our cost unit is going to be the same as it would if this were an inventory item, 2000 and 2000 PR0, production east and east production. The receiving accrual is going to probably be pretty much the same, 2023 receiving accrual, again with production east and east production as the cost unit and cost center section. Okay, the next slide. When we set the item up, and this is the important part, when we set the item up, we've just identified the GL account codes that are going to be hit when we process a transaction, process a purchase order. So the item we're going to be setting up here is going to be item number Chrome. Non-stocked, you'll notice over on the right-hand side, it's non-stocked and non-controlled, with our primary location of MA and a material cost type of OP. At no point on this screen do you see the GL account codes, but those GL account codes are automatically processed because of the material cost type location file. When we bring those two components together, the primary location and the material cost type is what's going to create our GL account codes for distribution when purchasing this item. Okay? So now let's actually create a purchase order. So we're going to create a purchase order for this item, chrome plate finish services, etc. And we're going to print this purchase order. Once we've printed the purchase order, we're going to have to go in and receive it. So let's click to the next screen. When we get to the PO receiving, one of the things you're going to notice is that the accounting section down on the bottom in the distribution says receiving accrual and outside processing expense. If this were an inventory item, we would see inventory account number 1105 for an assembly, or 1101 or for a component, anything. But what we've done here is we've made sure that when we receive this, the GL account code is correct, outside processing expense. By saying this is a non-stock, non-controlled item, and changing the inventory account code to an expense, we're not going to run into any inventory problems. And this is probably the most important part. If you've worked with production order processing before, you probably have used value-added cost and product cost structure. Probably when we're talking about purchasing an item such as chroming, or it could be powder coating, it could be spray painting, it could be priming, it could be grinding, it could be anything, where we're talking about a service to be performed on each item, we want to make sure that that expense is someplace where we can track it, as well as comparing it to our absorbed cost. Okay. Now, as far as the result is concerned, using this approach, it'll provide more accurate product cost for the item that's manufactured. The accurate product cost really is important for two reasons. First of all, it's important for pricing purposes. You want to make sure that you have accumulated all of the costs necessary to give you a good idea as to what your costs are based upon how you're going to price your end item, and also when you're paying sales commissions that are based on that margin. So it's important, extremely important, that we have an accurate product cost for the parent item. We always want to keep looking at the product structure cost just to make sure that it stays in line with the actual cost of the process that we're running. Now, when we talk about POP order completion, and we'll show you the T accounts that go along with this, we're going to credit outside processing absorbed. And when we looked at our explanation and our definition, we saw that that was account 7700 for outside processing absorbed. The PO receipt, and we saw that just a couple of slides ago, the PO receipt creates an offsetting debit to the outside processing expense, and that was 4210, outside processing expense. What this basically does is transfer the outside processing cost into inventory as part of the product cost. So how do we see that? How does that look? Let's take a look at the T accounts. When we process, upon reporting of production, the outside processing absorbed is credited and the inventory or WIP account is debited. Let's assume for a moment that we don't complete production at every step of every point in the process. All we're looking here is we're crediting absorbed, outside processing absorbed, and we're debiting WIP inventory. If in fact we completed the project at one time, it wouldn't need to go to WIP inventory, we'd simply send it to finished goods. We didn't do that here. The rest of the production is another 50 items that we have here, and the WIP inventory, again, is going to be debited for the 50. When we close the project, WIP inventory is credited and your finished goods inventory is debited. So we've just taken all the information for the absorbed costs, all the information that we have, and we placed that into our finished goods inventory. We did that because we did say that we wanted to roll all of our costs into the parent item. So these are the T accounts. It's been a while since I've actually used T accounts, but this shows just exactly how we're going to be doing this processing. The last piece of this exercise, and we didn't include a graphic on this, but what winds up happening is the absorption account, the 7700 for outside processing absorbed, can be tied to the outside processing expense. Basically, in shop floor, there's a lot more detail as far as variance analysis is concerned. But what we're doing here is we're actually capturing what we, quote, earned as far as our standards are concerned for outside processing and comparing that to the outside processing expense. While it's more of a manual process, it's something that actually can be done relatively simply in a POP environment. So that's pretty much it as far as our production order processing, outside processing, not only the process itself, setting it up using the value-added cost and the product structure cost, but also being able to set up an item for capturing the expense of an outside processing cost and then being able to compare that to the absorbed cost as well. A little bit more detail, excuse me, on the shop floor side, and Len will take care of that right now.
Great, thank you, John. So as we go into shop floor, just a few concepts to understand. Outside processing is treated as a routing step, as a unique type of routing step within an overall routing. Unlike production order processing, there's a much stronger link between the shop order and the purchase order, and the purchase order is actually linked to the shop order at the time of creation. We're going to see that. Similarly, the cost for outside processing gets posted into the shop order as part of work in process upon PO receipt. And all of the final clearing entries, the earned amounts, the absorbed amounts, whatever your preferred description, all of that happens when the shop order is actually completed. So let's take a look at some of those setup considerations. We saw with POP production order processing that a lot of the magic happens as a result of the material cost type location account. The accounting instructions for shop floor happen as a result of the work center account group, or if they're not used, the accounts that are in the package setting, the default accounts. On this slide, you can see that the outside processing absorbed is being directed to 7700 for account group AG1. And the outside processing expense for all purchase orders that are linked to a shop order that is using the work center that has account group 1 will hit 4210. So this is where all of the instructions happen. You can see that there are also two different variance accounts, because in some cases the purchase order might be different than what the routing that was set up and the costs that were set up in the routing expected. So this is a very important aspect. Again, the work center account group is linked to the work center, and you actually do have to create an outside processing work center so it can have its unique accounting instructions. The next most important step is how a routing is set up for outside processing, and this is a routing header. Ordinarily, you'd be clicking on the operation button and you'd be entering operation 10, 20, 30. This is different labor steps and so on. To add an outside processing operation, you would click on the outside process button in routing entry. This is the second screen that you would see, where you would enter an operation number, and you would be assigning that number yourself, because it is not going to be sequential like the operations, the labor operations, which might go 10, 20, 30, 40. This you would want to number based on where you want this particular operation to fall in the sequence of operations, just to make it look correct and also to be correct in terms of the sequence. You would choose the department. You've got to create a department for a work center, and I've created a work center called Prime, and I've also identified a default vendor for this particular requirement. Now, that's a default vendor. It doesn't mean that I have to have every single part primed by vendor number 200, but that's the default for this particular outside processing step. I've also indicated the process days. This is the amount of time expressed in days with a decimal that those parts will be out of the shop and unavailable for further processing internally. You need to include that and make sure that that's correct, because if you are using the lead time roll-up report and maybe some advanced scheduling techniques, you need to have this particular part of total lead time defined properly. This is the rest of the entry, or actually this is the other side of that same screen. It does require a labor cost type, so you do need to set up one of those. It's not as critical, but it's helpful to have a unique one if you ever wanted to do some reporting on it. If you're so inclined, you can actually set up an operation code that would store all of this. I see about a 30-70 kind of usage of operation codes, where 30% of people have so many repetitive routings that they set up operation codes. 70% just kind of go for it and don't worry about memorializing operation codes to reuse. But the PO flag is important. Your choices in terms of this particular type of outside routing, outside process, and how it's going to appear on the purchase order are either I'm going to call out the parent, or I'm going to call out a description of the actual outside process. The reason you have the choice here is that sometimes it's more visible if you called out the parent number, but remember, we don't want to put the parent on a PO and then receive the PO, and all of a sudden I've incremented the quantity of the parent on hand by 1 because that didn't happen. But if I use the parent number within an outside processing routing and link the purchase order to the shop order, it won't happen because Macola understands that, oh, they're just buying an outside process for this P-frame assembly or whatever it is that the parent item is, and it ignores it and it does not increment the finished good. I like using the description. It's just less confusing to me, and it looks a lot better on some of the reports that you're going to see. So that's the way I've set this. And the outside item number that you're seeing, I've actually typed that in as a just user-defined prime parts. And that's how I set up the remainder of this outside processing routing step. The last step or the next step I should say, is to enter the expected cost of the outside processing expressed in whatever unit it is that you are processing these in. Typically eaches in something in the case of maybe a chroming process. The standard cost is the one that will default to the purchase order. Doesn't matter whether you're using standard cost, average cost, or last cost, the standard cost is the field to use that will default to the purchase order. Lastly, you can also enter any kind of instructions in the way of notes associated with this particular operation as instructions to your vendor. So in this case, I want to make sure we prime coat both the front and the back and sand and re-prime any imperfections. And that basically concludes when I click Save, that concludes the entry of the outside process operation. When I bring the routing header back and I click on the All Detail view, and that's important because if I just clicked on Operations, I would only see the labor operations. But when I click on the All Detail view, it brings up both the labor operations as well as the outside processing operation. Notice that the outside processing operation is referred to a type U, and that's just keeps it unique as an outside processing routing step. Now, when you do run the lead time roll-up report, remember when we entered the routing, we entered the time required as process time. So it's going to show up under the process hours and days. So we entered 3 days, so it's going to end up showing us 24 hours and 3 days as part of the overall lead time for manufacturing this particular item. If you happen to be using standard costing, or even if you're not using standard costing, many of you may not know this, but if you're on average cost, you can still use the standard cost module to roll up costing and develop a benchmark for whatever purposes, for budgeting, for planning, for pricing. And standard costing is going to be a subject of a very near future webinar. So for any of you that are interested in that, you might want to make a note of that and look for our invite. But the standard costing application and the cost master identifies the grand total of any outside processing costs that might be associated with this particular assembly. I say grand total because many of you might have multiple outside processes. So this is summarizing any and all outside processing routing steps and including them as a separate cost element in the standard cost master. Now, when creating a shop order, you would create the the shop order in the normal way. And when you use the copy bill of materials function, it allows you to copy in, well, bill of materials, all of the routing operations, the outside processing operation steps, as well as any notes and so forth, if you recall. So no further action is required to copy in an outside processing routing step. You just click Copy BOM, accept all of the defaults, and you bring in the outside processing operation as part of this particular shop order. And then if you were to look at the shop order, again, the all detail view, in terms of what was copied in terms of operations, you will see our U-type priming operation, in this case, quantity 10, and there are my notes. Prime raw materials, that's the description of that, and prime code must cover both front and back, if you recall. Those notes are also going to appear on the purchase order, which is very handy. You don't have to remember to include that information on that purchase order. So in processing the purchase order, this is as easy as it gets. You create the order header in the normal way. In this case, I took the default vendor. I could have used another vendor if I wanted to. And as I got to the first line item, the shop order button on the right side becomes hot. And you click on the shop order button, and that automatically brings up the details from the shop order. Oops, I manage the mouse here. And gives you this information screen and the opportunity to change any of these that you would like to change. At this point, it's telling me who the default vendor is, but I already knew that from the shop order header because I created it. It's also telling me the quantity. I may choose to split this into 2 lots or something like that, maybe reduce the quantity, or maybe even increase the quantity depending on what I need to do for that particular run. It identifies the unit cost. Although I haven't created a slide on this, you would have to click into that cost quantity button. That cost will automatically be the $12.50 that is indicated in the standard cost for that particular routing step. At this time, if you were getting a different quote, you could change that particular cost for this particular shop order and purchase order. Now, unlike the production order processing, outside processing management, within shop floor, you can actually print a schedule identifying where everything is at outside vendors. Some of you may be working with multiple outside vendors, and it gets a little bit scary when you have that much stuff out and no real report as to where we are and what, who do I need to be following up with, all of the things that a production scheduler and dispatcher needs to worry about. So this report can be run for all or a single shop order or dates, but it essentially answers the question, hey, where's my stuff? So at any moment when you print this report, it's going to tell you that these are the vendors that you have some of your parts at right now. These are the items that are being assembled, meaning this is the shop order, notice, and the item that's being assembled on that shop order and the quantity. And basically this is what's happening. It's a priming operation, and I've sent 10 out, and I've received 0 back. And on the left side, it's giving me the information about the dates. So some of my vendors have had stuff since January of 2013. I might want to give them a call and follow up. But if I'm trying to keep my shop order number 92 on track, I really do need to pick up the phone and find out when this vendor is going to be shipping these parts back to us. So this is really helpful. It's also an important audit trail, and especially around physical inventory time, when you're asked to validate the value of work in process, you're going to need to be able to show them where these parts are, where an auditor, where the parts are. The receiving process is also linked and highly automated, so that when that purchase order receipt takes place, it's automatically referenced to the shop order and the MCA job number associated with that shop order. So the receiving of that PO line hits the outside processing expense, because that's where we told the Work Center account group to go, and it's also charged into the shop order as part of work in process. So here we can see that the job number is referenced. On the other PO receiving report for production order processing, there was no job number. So there is no linking with production order processing as compared to shop floor control. And as normal, we would credit receiving accrual and we would debit outside processing expense for this PO receipt. Now, when I go to look at the shop order and the MCA job cost, I'll notice that they too have been updated. So I received my 10 times 1250 into the shop back from my outside processing vendor, and here's the $125 that has now been debited into work in process and charged to that particular job. And lastly, before we go to questions, this is the big picture as to how the whole thing happened from an accounting and cost accounting perspective. So we just saw the receiving accrual and outside processing expense debit. So those clear each other. I've kind of summarized all of the transfers into WIP, but essentially the raw materials, which happened to go to inventory finished goods in this particular demo company that I used, was transferred into WIP. Direct labor was absorbed, variable and fixed burden was absorbed, and outside processing was absorbed into the cost of the product. And there you see the transfers into WIP for both the outside processing with a reference to the PO number, and at the very end, the transfer out of WIP into finished goods of the total amount. So that completes the cycle of bringing it in from PO receiving into work in process and then back out through finished goods. And hopefully there were no variances along the way, but if there were, such as a PO cost difference or something like that, it would have hit the appropriate variance account that was identified on the Work Center account group setup. So that kind of concludes the material. I'd like to, at this point, kind of open it up to any questions and answers. And what we usually do is see if there's been any questions that have been kind of messaged to us using the WebEx message function.
And there have. We have gotten a few questions that came in over chat. So let's go ahead and get to those. And then once we get through the chat questions, I will open up everyone's phone line and we can have a more direct Q&A as well. A couple questions that came in during the production order processing portion. So John, you might be the one to handle these. One question is, do you need to be on standard costs to use outside processing?
No, you don't. I had standard costing turned on to show the section of the product structure cost. If you don't have standard cost turned on, if you're not using standard cost, you don't need to have that.
Okay, and then in production order processing, why use a specific outside processing item?
you use a specific outside processing item because you want to capture the cost. You want to capture the cost of the outside processing, but it's also important to capture that cost and compare it to what you're saying the cost should be. As we did here at chroming, we said was going to cost us $5.40 per each. How much did I really pay? And we find out when we actually go and compare our absorbed cost for outside processing with the actual expense cost. How do we get the expense cost? By creating a non-stock, non-controlled inventory item where we're not counting the inventory, and we've actually changed the GL account code for the inventory item to an expense account.
Okay, and then there was one
again, that is done on the material cost type location file. If you don't have a material cost type location file, you choose not to put it in there, and you still want to use it, you're going to wind up defaulting to the setup, which is still going to give you an inventory account. And we don't want our expenses going to the inventory account. We actually want to be able to track those.
I've seen that a lot, John, where the purchase agent, not having any other items set up for them, they'll just enter a description of whatever it is. The purchase order asks, this is a non-inventory item, do you want to continue? They say yes, and it defaults to the package setting for inventory, hits the asset account, which is invariably inventory, throwing inventory off, and the cost accounting is out the window.
Good point. Excellent point, Len. Thanks.
And then another question that came in, John, they want to know if they can update their value-added costs, such as labor or outside processing, in order to get actual costs.
To get actual costs,
I think we're referring to the edit during production checkbox. So if a specific type of cost like labor, that if they wanted to say, yeah, this is supposed to take 2 hours, it really took 6, that can actually allow 6 hours of labor to be charged to that particular production order. And yes, it definitely can do that. There's a function for that.
And you're right, Len, and that was one of the check boxes that we didn't have checked on our product structure cost. And if you want to be able to do that, you're able to edit your variable costs. You're able to do that, having checked that box. Absolutely right.
Well, and this question, actually, the next couple of questions came in during the shop floor control portion. What happens if you have multiple outside processing steps where an item might actually go from one outside vendor to another?
Oh, okay. That's pretty common. The only thing that has to take place to accurately reflect where the item is the PO receiving for the first outside processing step needs to take place, and that would essentially move it along in the process, update the outside process schedule, and essentially move it to operation 45 if that's the next operation, which happens to be the guy who does heat treating down the street. So there can be any number of outside processing vendors with no labor steps in between, just outside operation, outside operation, outside operation, and then it's back inside to be finished, packaged, and sold.
Similar question just came in on chat, and I think it's slightly different though than what we just asked. And Georgina, if we don't cover this correctly when we open the phone lines, please re-ask the question. But how would it function in shop floor control if you're sending a bulk quantity to an outside plater for more than one shop order?
Well, when you're creating the purchase order, you can actually have multiple lines for that particular vendor and link each one of the lines to a separate shop order. That's the only way that you're going to be able to keep the cost in the right shop order. So maybe it's made up of 10 different shop orders, grand total of 1,000. You're going to need, a purchase order line number 1 for 50 of them, and purchase order line number 2 for 150, and whatever the quantities are. That'll keep the costing between the shop orders straight.
And then one more question that came on chat before we open up the lines. What happens if the purchase order cost is different than the standard cost?
Oh, okay. Yeah, I mentioned that at the end. So in our case, where $12.50 was the standard cost, and I picked up the phone and called the vendor, and he says, yeah, it's $13.75, and that's what I created the purchase order for. At that time, again, now depending on whether I'm on standard cost or average cost, if I'm on standard cost, it's going to create an outside processing cost variance for me. If I'm on average cost, it's going to, the $13.75 will become part of the new average cost once completed, but the MCA reports will show an expected versus actual. It will show a variance, but all of that variance dollar amount would have gone into inventory anyway. That's a good question.
So I am now going to unmute everyone's phones. I do just want to remind you, if you don't have any specific questions, please self-mute your phone so we don't get a ton of background noise. Everyone's line should be open now, so if there are any questions that anyone wanted to direct to Len or John, now would be the time. Sounds like maybe we got everything done through the chat questions. Alrighty then. Looks like we handled all the questions. So Len, I'll go ahead and let you kind of close things out.
Great. Well, I want to thank everyone for attending. This is our contact information. If anything else comes to mind, we're going to charge for advice. Just give us a shout. We'd also like to know if you have any ideas about future webinars, things that are really of interest to you that we can cover in 45 or 50 minutes. And you can also help us. Anyone that you know that can use the kind of stuff that we know about, refer them to us. That will help us kind of continue to fund this how-to series. And I want to thank everyone, and this is my thank you dance. So
Thank you.
Hopefully, thank you, very welcome. So long, everyone. Bye-bye.
Bye.